But if you're one of those individuals that has a retirement account, an old 401k from a previous employer, and we can get into this a little bit deeper, or a traditional or Roth or simple, you probably don't know that you can leverage that and use it to invest in alternative assets like real estate, like precious metals, businesses, Bitcoin, et cetera, et cetera.
Welcome back to the Mac Podcast, where we talk about anything in entrepreneurship, business, real estate, and today we're going to be talking a lot about investing. We always challenge the conventional thinking, and sick of everyone following the same old advice that's out there that investing in a 401k is the only option that you have to retire on. And you guys know that I'm all passionate about not. I think the 401k is nothing more than a glorified savings account. And I think I got a guy on here who is able to convert your boring 401k into something else that can create generational wealth. So welcome, Greg Herlean.
Well, thanks for having me, Mark. Yeah, fun subject. I love this subject, although some people might not like it, but I think it's a powerful subject for sure.
Yeah. Well, what do you do right now? What's your main business? What do you do?
Well, look, I've been doing real estate for 23, 24 years. And so I'm always doing real estate deals every single year, probably just a handful of deals. I'm not like super active where I used to be flipping multiple deals every month. I'm doing a couple deals a year, commercial project kind of stuff, but my main priority, where I spend 95% of my time, is with our trust company, Horizon Trust. We're helping people unlock their retirement accounts, invest it in what they want to, in real estate, what we're going to a little bit talk about today. So I spend most of my time, if I'm not with my family, talking about retirement accounts. And I know it might sound boring, but it is absolutely not boring. So
Yeah, I invest in all the boring assets myself. I have a construction company and an investment, but I love boring assets, storage, and multifamily. So I like talking boring, but I think converting boring savings accounts into something, and even these 401ks, I don't think people even know that this is out there. So well, explain to me a little bit what Horizon Trust is and how that came to be.
Yeah. So look, I'll back up before I explain too much about Horizon Trust. I was a massive real estate investor looking to flip and trying to find money and partnerships where people could partner with me so I could go out and scale my business in my early 20s. And so banks weren't so quick to lend me money when I was 25 years old. And so I learned about this concept that we're talking about today, that actually individuals can invest or use or leverage their retirement plans and partner with me. And once I learned about that, I was like, oh, wow, like this opens the door to so many more potential people that I can do deals with, friends and family and my community, et cetera. And so it really scaled my business, enabled me to go from doing, 1 or 2 homes every month or quarter to like 10 or 20. Like it just totally changed my business. And so I first was really just, it sounds cheesy, but like the client. I was the Rogaine hair guy. Like I was the guy using it. And then after doing it so many times and teaching so many people how to use their retirement accounts to invest in real estate, like leave their financial advisor, which is one of the harder things to do. Like, so to kind of like what you said, like right now, like 401ks are boring only if you want them to be boring. They're boring if you keep doing what your parents and grandparents and great grandparents did, which is just give it to somebody who you like or trust, who is making a fee and investing in something you don't understand. And then you hope and pray that when you go to retire, it's $1 million or whatever the number is. It's enough for you to retire. That's the model that I think everyone's been living through for decades. And it doesn't work. Why doesn't it work? Because people go to retire and they can't. There's not enough money in there. And so what I've been able to do is now I'm on the other side of the story I just shared with you. I'm that person now that will lend to real estate investors, that will lend or partner with real estate developers using my IRA or my retirement funds. The exciting part about that, why retirement accounts are so sexy and exciting, in my opinion, is if you can unlock them and put them with a company like mine, which allows you to invest in what you want. My company does not tell you where to invest it. You tell us where you want to invest it. But now you're able to put it in things that you know and like and understand. All of a sudden, you're able to make these pretty big gains and not pay taxes. For example, you and I, Mark, right now can go invest in a deal, and let's say we're 50-50 partners.
Yeah.
And you put up your money from your LLC or your checking account, and I put up my money from my IRA, 50-50. We each put up, let's say, $50,000. When that deal turns or flips or whatever happens, distributions come out, half of your money, and you get your money back. Let's say you're 50 grand, plus you get your gain. So let's say whatever the gain is, let's say it's, $25,000 gain. So you get back 50 plus the 25, you got to pay taxes, you do, on your 25. So now let's say that 25 is really only 15 to 20, whatever that number is, depending upon your tax bracket.
Yep.
Are you with me?
Yep.
I get my $50,000 back plus my 25. So I'm at 75,000. So at the end of that project or deal, 1 year, whatever the case is, I'll have 75 in my IRA. You'll have somewhere between 60 and 65. Now we go out and reinvest again. And so now we're going to invest in the same deal, except my 75 is going to earn its 25 and your 60. So you're going to always constantly be compounding on a lower number than me because you're paying taxes and I'm not. And so the powerful thing about investing is, first and foremost, if you have a retirement account. Sorry, you asked me one question. I'm going to town right now.
You do it. No, you take it to school.
Maybe because it's this black coffee I'm drinking here. I don't
take it to school.
Coffee.
This is great.
But if you're one of those individuals that has a retirement account, an old 401k from a previous employer, and we can get into this a little bit deeper, or a traditional or Roth or simple, you probably don't know that you can leverage that and use it to invest in alternative assets like real estate, like precious metals, businesses, Bitcoin, et cetera, et cetera. Your advisor typically won't share those things with you. And so that's what I'm passionate about, is teaching people about what they can actually do with your retirement account. And if you do it, rather than cashing out your retirement account and then investing in, let's say, a deal, your gains stay in your account and you don't pay taxes. So I'll stop there. That was a lot on your one question you gave me, but I could go on and on, but yeah.
Yeah. Well, I'm just going to chop that up a little bit. Yeah, that is a lot, but I think end of the day, I know I was listening to some of your content and you talk a lot about compound interest and really in real estate. I mean, it's a tax deferral game more than it is any other. Appreciation, cash flow is all great, but it's a tax deferral game. And I think the more money you can keep, you're playing the game correctly. And so what would you suggest? Let's say it's the 20-year-old out there, your kids or whoever, would they max out their 401k and max out a Roth and invest it from there in your intentions, or would they just take the check from their checking account and invest in a piece of real estate?
Well, look, everybody, in my opinion, especially if you're starting the example you just gave me at 2021, like my son's 21.
Okay.
At 19, he opened up a self-directed Roth IRA. So he's got a Roth IRA. He put $5,000 in, and that was the right move. Anyone that's going to start an account from scratch and invest should absolutely open up a Roth account if you qualify, and that's something we help you find out if you qualify. Most people do. Yep. And then start investing, and you can invest in a small level. Like some people will then be like, okay, that sounds great, but what am I gonna do with $5,000? Cool, I got $5,000 in there. Well, what are my options? Well, there's actually lots of options, but one of the things you can do is just tag along. That's not a technical term, but be part of the syndication. So your Roth $5,000 could be like in one of your deals, Mark. If you got a deal that needs $100,000, my son could put $5,000 from his Roth and own 5%, and using his Roth. And so it's not too early to start. It's also okay to start with just $5,000. I would just say that the interesting stat that probably almost all listeners have is 30 to 40% of your audience and that are listening to this aren't starting from scratch, already have an old 401k because they've left their job, or they have an IRA, or their spouse does, a simple, separate, traditional. Why do I know that? Because I know that there's over 97 million Americans that have IRAs in the United States. So there's only 300 plus million people in the US, 97 million of them have an IRA. So a third of you have an old IRA account, probably not totally happy about how it's performing. That'll actually, just so you know, that represents over $11 trillion.
Oh, gosh.
So there's tons of money out there, and it's sitting in these accounts that most people are just not happy with. And so, so anyways, that's why it kind of works for both sides. You mentioned, should I start from scratch? Absolutely. If you're 16 years old and you have a job and you have income, you can start a Roth. If you're 12, if you have income, you can start a Roth. So yes, you should start with one, but number two, if you already have one that you don't like, that's not performing, you absolutely should have a conversation with us as well.
Yeah. And I like that. And then I think there's the other side of the people who are 40, maybe have had a couple jobs and then an old 401k sitting around. Everyone, I think there's so many documents that come with some of those 401ks. It almost confuses you. Like, what should I do it? Like, you don't know what to do with it.
That's right.
And I talk to many people that are that way. And, I stumbled across your, a few years ago, but it's like, that's where I send people. And it's just, how, unpack that a little bit. Like, okay, someone's sitting out and listening to this and like, yeah, I got an old 401k. I don't know what to do with it. How complicated of a process really is this?
Well, they like to make it complicated because look, no one wants you to take money from them, right? So if you're at Charles Schwab or Fidelity, they want to make it a little bit complicated. Our team, and hopefully you experience the same thing, Mark, makes it super seamless. So if you're one of those individuals that have an old 401k, what we do is we do a call with you, and Mark, I'm sure you can share my information. Well, you can email me or come to our website, but we do
we'll link it below.
I'm sorry, what's that?
We'll link it below. Yeah.
We'll so if you set an appointment with us, that there's no charge. We just talk to you about your current account. Okay. So we look at it and we say, oh, you got this old 401k. Let us find out how quickly we can get it transferred over. And we help you fill out all the paperwork. So we'll spend about 10 minutes on the call with you, not very long, fill out all the paperwork for you. Then we help you get it submitted to wherever it's at, Fidelity, Charles Schwab, any of these brokerages houses. And we request the funds to be moved from wherever it's at over to us at Horizon Trust. And you can move over all of it. You can move over whatever percentage, a dollar amount you can move over. It's up to you. So this is not like an all or nothing thing. You might be like, hey, look, I like this concept that they talked about, but I don't want to move like $500,000. I want to start with 100,000. You absolutely can.
Okay.
So you can test out the ideas. So then you can have two IRA accounts. So you leave the one where you're at, and then transfer over X amount of dollars to us. And then once it comes to us, that process takes it takes them to release the money about a week or two. Sometimes 3. They like to hold on to it as long as they can.
That's amazing to me though, that like you can get it that fast. Like I thought this was a year-long process. I don't know. I didn't know anything about it.
No, it's super quick. It's it's quick because that's one of the main reasons why I started this company, is I want it to go fast. Most companies, it takes them a month or 2 to get it over because their service is terrible. Very fast at getting it transferred over. And then once it arrives, we're not a fiduciary, meaning we don't make decisions on your behalf. Once the money comes to us, it sits in trust in our bank account until you tell us where it should be sent. And so, that's your job. It's self-directed. And so then you'll decide what kind of options there are. And there's tons of content and education, not only online, but on our website, of what people are doing, how they're using their IRA. You get to do a little bit of research, but I'll tell you, only 4% of Americans self-direct. Okay. There's a reason why most of America doesn't do it. 2 reasons. First, uneducated. People don't know they can do it. Number 2, people shouldn't do it. Who shouldn't do it? Probably 60, 70% of Americans should not self-direct for obvious reasons.
Yeah.
If you are not going to look and do some research and understand where you're investing your money, you should just keep doing what you're doing. But if you're kind of want to be a little bit more active, when I say active, spend 15 to 30 minutes a month on like your future, your retirement, right? And do some due diligence on where you want to invest your money, then that would be more for you. And so I really do feel like even though only 4 to 5% Americans self-direct, it's probably a 10 to 15% marketplace in the United States.
Wow. What and results? I mean, likely they're going to make, what's your take on the 401k, the stock market, hedge funds running the ship? We know Fidelity's making money. We know they're making money. But I just like to hear your take because I always find this interesting.
Yeah. Look, I am a big proponent in investing in what you know and controlling your money. I also believe that nobody cares more about your money than you do. I don't care more about your money. Same vice versa. That's just not natural. As an advisor, I might care about it a little bit because I want the fee. And you look, but look, advisors are not all bad. I have an advisor who I actually know and trust, and I have money with. They're not all bad. They're also not all created equal. I just feel like, and I have now proven to myself, as most of my investors, that I can outperform the market. And the market, historically, I mean, it depends upon, it's so skewed. It's a whole the market is a marketing concept as far as what they want to show you. Like if you take certain segments, you can make it look better. Or if you just show us like 12 months or maybe 20 years. But look, on average, you're going to make 5 to 8% on your best average in the marketplace. And so I've consistently got 10 to 14% every year in my money. And if you look at, I've talked a lot about compounding interest, but if you start looking at your investments, and if you just put in that you're going to average 6 to 8% or 10 to 12% over a 10 or 20-year period, you might not think it's a big deal. It's a ginormous deal. We're talking about millions, probably, and we can play around with that, or you can, but we're talking about $10 million difference, $10 million difference over a 2 to 3% difference in what you make in a 20-year period. So does it matter? Yeah. It's not like $100,000 difference. This is millions of dollars just by controlling, unlocking, and putting money where you know and trust. Now, there's risks associated always, like who do you give it to? Who do you lend with? Those deals can go bad too. So you do have to still be careful and be responsible. But consistently, I love lending. So I love making 10 to 12%. Sometimes I make more, but I'm not here to say you got to make 20% a year on your money. You don't have to. That's not the goal. Make double-digit consistent returns and don't pay taxes, and you will be just fine for retirement.
There you go. Make sure you convert your 401k into an IRA, save yourself on some taxes. I think the compounding interest is something like I said, the number one reason why we do real estate is to save more money, to keep it compounding, especially at a young age. But I think I was, again, listening to some of your content. You don't have to be 20 or 30 or 40 years old. I mean, you could start this 67, whenever, right? Like you're going to live till you're 90, you do it at 70.
You can do it anytime you want. It starts having longer, bigger conversations when you're over 71, 72. But it still makes sense if you have a retirement account. So yeah.
And I want to go back a little bit. You said when you were younger, you were into real estate pretty heavily, and were you having trouble raising money or getting the debt basically, and you found this solution or a solution?
Yeah, that's exactly what happened. My very first deal in my life was using someone else's self-directed IRA. They lent me 100% of what I needed. It was $60,000. They lent me all of that money to do my first deal. And my deal that I gave them is I said, I'd give you 75% of the profits. I'll keep 25%. And it took me a little over 3 months to flip that deal. And they ended up getting back their 60 plus 12, and I got 4,000. And then it was such an important moment for me because I was able to prove to myself that this really worked. And the whole concept, self-directing money, getting it back to them, the percentages, real estate, buying, flipping, like it just proved. Now, did I fail at certain deals in the future? Absolutely. But I did hundreds of deals. Never got to 1,000, but like almost 700 deals. And most of them were done by using self-directed monies, other people's self-directed monies. And this is before a trust company. This was not when I had a trust.
So how did you market yourself for that when you weren't doing it like as a professional company at that point? Yeah,
well, look, and I want to be super clear, just because I'm compliant that this was all prior to me owning a trust company. I don't don't promote and solicit to any of my clients at the trust company. They all pick their own investments. But back then, look, the answer you don't want to hear, but the real answer is the answer that has made you probably who you are, is I hustled. I talked to everybody about it. I thought self-directing was the best thing since sliced bread. And I thought that because nobody knew what it was. So what I was sharing in my young 20s and even mid 20s was a message that no one else had really heard about. This was 20 years ago. Self-directing has only been around since the 70s. It's still a long time, 40 years. But 20 years ago, what I was talking about when I got into these different real estate groups and chats and being out and about, it was mostly live stuff. It wasn't like social media as much back then. Is I would just, everyone else would go talk about a real estate deal, flipping it, the numbers, making 15% or 20 and the fix and flips. I was a real estate investor talking about self-directing. So I was unique and different. Did you know that you can use yourself? Did you know you can use your retirement account and partner with me in your next deal? Well, no. What do you mean? What are you talking about? Those are the questions I was asking everywhere I went. Do you have an IRA? Are you happy with it? What kind of returns are you getting? Those are the conversations I was having everywhere I was going. And so it just started to snowball. And look, in the first 5-6 years, I was doing great, but great for me. And relatively, I was still small, very small. But I was just, that's what I did. It was hard work. I mean, right now I feel like it's easier. Right now, there's so many platforms and communities, and you can show up at events but it's all around you. If you just really wanted to raise money, equity partners, debt partners, and meet people, they're all around you. You should be talking about it all of the time. We should be one of your partners to help you facilitate getting funding for your business.
Yeah. Well, there you hear it. If you're a flipper or a real estate guy looking to raise money, make sure you're out educating, and then send them to Greg to get, so you can get your deal done. Really. I mean, that's, you were obviously using a different service. You were pushing everyone somewhere else and decided, man, maybe I can solve this problem. And Horizon Trust came about. Is that the story? Or
yeah, well, look, I was, as you imagine, like this, just think about this. So now I'm scaling, I'm kicking ass. I'm feeling like I'm doing great. Right. And I go to you, Mark, and I'm like, hey, Mark, you want to be in my next deal? And you're all excited about it. So I need your money to get in this next deal. And I introduce you to this other company. I'm not going to say them because I know they're still around and I know them. So I don't want to talk crap about them. I would refer you to this company so your money could get set up to invest in my next deal. Well, all right, Mark, get it set up, get your money there. Well, that process of me just saying that and that happening would take sometimes 4 to 8 weeks. By then, my deal is gone. And so this kept happening over and over, and the service was terrible. And I was like, I got to just fix this. So I truly just created a trust company to fix that problem originally. That was the reason why I did it. But now it is like that. This is my main business. My kids hear about it all day. I talk about it. I love it. But that is originally why I set up a trust company so long ago. Yeah.
Dude, that's an awesome story. And it's helped, how many clients have you helped over 19 years of, or how was it or how long have you been in this?
Well, my trust company's been around. We've been around 14 years, but I've been in the self-directed space for, since, I was 22 years old. So, I referred probably over to, other companies, 4,000 accounts. We have about almost 7,000 accounts. So we have over, I've helped over 10,000 people do it.
Dang.
Look, and I'll tell you, just not to get, you didn't ask, so you can cut me off if you want, but there is still, this is a for business thing. So there is a fee to do it. And I want to just address that real quick. Is right now, wherever you are investing your retirement account, you're most likely paying anywhere from 1 to 3%. You think you're probably paying 1, but you're most likely paying 3 because you're paying your advisor 1. And then wherever you're invested, there's different fees, mutual funds, loads, debts, all these kind of different fees you're paying. With us, the fee is 1% is the max, and that's for the smallest account. The bigger your account, the smaller percentage it is. For example, if you have around $100,000 with us, you're going to be around 0.5%. So it's more than fair. We try to, we want you to have a bigger account. The bigger the account, the smaller the percentage fee to us.
Got
And
it.
we include everything. We don't do wire fees, nickel and dime for any other fees. Service is our number one thing. And it's because that's why I created the company. So,
Yeah, that's a good
even
point.
I know people ask that, is there a cost? Yes. It comes out of your IRA. So, there's no credit card or no check or anything like that. So.
Yeah. Well, I think, and you brought up a really good point that, I think people think about their 401ks that, it's all, no one's getting a fee on that. It's like, there's these huge companies that are managing it. And I mean, the guy at Fidelity's making 1-2% sometimes on small accounts. And then, so if you're thinking you're making 8% on your 401k, you're probably paying 3% in fees or whatever you are, and they don't talk about that enough either, but I'm sure that's how they have $11 trillion sitting on the sidelines in 401ks.
That's right.
Yeah. I'm going to ask you a little bit about the markets, just because I think actually, you know what? I'm going to hit one concept because I've heard you talk about this, or at least your son has been doing some media on this. But the self-directed is one thing, but then you have this infinite banking system, and I know that because this is not easy to understand, right? Like explaining this to a 3-year-old is not easy.
Self-directing, I think, is easier to explain than infinite banking.
Do you want to just touch on that? I want to see, maybe this will brush up on your skills and how good are you explaining the infinite banking system.
All right, well, I don't sell it, just so you know, because it's but I do own the policies, and so I do practice the concept.
Okay.
So it is different. Self-directing, both the purpose behind both concepts is take control of your money. You be the, you hold your money. And with I already explained self-directing, so that's self-explanatory now that I've explained it, so you can invest the money where you want. Infinite banking says, hey, look, take back control of banking from banking institutions by, instead of putting your money with the bank, letting them to invest your savings and your monies, put that money in a whole life insurance policy. Why? Whole life insurance policy is guaranteed. It's one of the things you can say is guaranteed. It pays a fixed percentage of typically around 4%. Even when the market was really low, it still was paying like 1% or 1.5% when the banks were paying 0. So it pays a higher rate. And then the whole point behind it is you put money into it, and you don't buy it for the life insurance. Meaning typically you and I would go buy insurance policy and we'd be like, I can pay $100 a month. And so what's the max amount of death benefit I can get? And that might be, let's say, $1 million, right?
Yep.
In the same example I just gave you, the idea would be, I'm going to give you $100 to put in this policy, but what's the minimum amount of death benefit I can get with $100? And it might be like $100,000 death benefit. And that's important because then for every dollar you put in, only a small percentage goes to the cost of insurance, and the rest goes to growth in this insurance savings account. That is basically your savings account that you can borrow from whenever you want after 30 to 45 days. And when I say whatever you want, typically between 85 and 95% you can pull out. So if I put in $10,000, within a month or two, I can pull out $8,500 to $9,500. And so the point is you use that as a bank account because it's growing, and you get a death benefit as a nice little perk, but that's who cares about the perks? We're not trying to die here. But the policy is growing interest-free, all the interest that you're earning in there, and then you borrow against it. And so when you borrow against it, let's say I want to buy a car, I would borrow against that rather than from a bank, because typically if you borrow from a bank, and now you're going to pay the bank interest, you borrow from your own policy.
Okay.
And whatever I was going to pay the bank, let's say it's $500 a month, I'm now going to pay my insurance policy loan back $500 a month over the 5 years. And so at the end of the 5 years, you essentially have that money back that you borrowed back into the policy, and you have your car free and clear. And so, and my son could do probably a much better job explaining this, because he literally, he works for a friend of mine and has been doing a phenomenal job helping lots of people set these up.
Yep.
But it works at all levels. You could works with, $1,000 a year. He's got people, even myself, people that put up $200,000, $300,000, $400,000, like take it out of their savings, put it into this policy, and let it be his bank account. And so it makes sense. You can also put it in there, borrow the money, invest it in something. and get that interest at 10 or 12% and pay back the interest rate on your insurance policy. There's a lot of creative things you can do, but I don't know if that answers your question, but those are kind of the differences.
I just wanted you to run through it. I mean, we're talking investing. So I think these are outside the box investing, even though it's been around for years. I think people still don't understand them, that they're options. And it's something that I'm looking into a whole life first. I have term, $4.5 million in term. It's, a few grand.
That's to protect the family. That term, like that is to protect the family. Yeah.
But you get these people that, hey, the savings account I'm earning 5-6%. So you got everyone plowing into savings accounts. Everyone's sitting there. What would you say? Would this be a better option? Like, are you parking money in your high yield savings accounts? Or are you parking money in your, maxing out your retirements and then your whole life policy?
Because of who I am, and my experience of hardship as well, I'm D, all the above. Okay. I put a little bit in my bank just because I like having some in the bank. But now I put a larger chunk into my IBC policies, and I always max fund my retirement account. So if you can fund your retirement account, you should always max fund that, in my opinion. And because then what you can do with that's what we've been talking about is powerful. So those are the three buckets as far as like, where the three buckets, I wouldn't say investments that I put my money in: bank, IBC, and then self-direct or my retirement account. And then from there, obviously, once you get to your retirement account, there's so many options we've been talking about already. So
no, and I think that was important to understand. I think there's a lot of people. It seems like there is a lot of cash on the sidelines right now, parked at banks or somewhere. I mean, getting high yield, and obviously that's where people are finding yield. So they're sitting there. What's your take on interest rates, in the future? Just because I value your opinion here, and then, should people wait, keep it in the savings? Because I think when everything flips, at some point things are going to flip, right? I would anticipate, it's going to be this big transfer to find yield again. What's your take on that a little bit?
Yeah, that's the big question. Look, I anticipate it will change, obviously. I don't think it's changing anytime soon. I do think we got a couple of years ahead of us before rates change too much. I hope I'm wrong. I hope that changes sooner than that, but I think we've got a couple of years. So, look, I remember my first loan on my first home I bought when I was 22 to live in. I was pumped when I got like 6 3/4. Like, that was a great loan. And so, the norm might end up being back to what it was, 22 years ago, in the sixes. But realistically, I do think we'll venture down to the fives again. But I don't see us seeing twos anytime soon, or threes anytime soon. So yeah, that's I'm not an economist, and I don't know too much on that. But I do just feel like we've got a couple of years based upon all the things that are happening with inflation and the government. Like, there's just so many variables that I just don't see the rates changing much at all.
Yeah, that's I think everyone wishes they had that globe, because you'd make a lot of moves.
Sure.
I think if they dropped interest rates even 1%, I think right now there would be like a frenzy, a boom
For sure.
market. So well, I want to talk a little bit. We have a lot of real estate listeners, and if you could talk through just some of the mistakes you made, and maybe the worst investment and best investments that you could talk us through, just through your whole career, because you're pretty involved in the real estate.
Yeah, look, I mean, there's a few best ones for sure. The thing that I got away from that I think was always good was single family home flips. And it sounds silly, because I've done some big stuff since, really big stuff: hotels, apartment complexes, commercial buildings. But the single family home is simple. When things go wrong, it's not a big deal. When I had 2 hotels that took 7 months longer to get done, I was paying me and my partners $100,000 a month in debt and expenses. out of pocket over our budget. And when that's happening, it's painful. And when your house that you're flipping, or 3 or 4 houses that you're flipping, is over 3 or 4 months, it's okay. It's manageable. You can kind of figure out how to get through it. So I'm a big proponent in investing in what you know and understand, but staying in your lane. People get excited about going into different areas. You don't have to. Find an area you're comfortable with, the people you trust, and get the singles and doubles, whatever that singles and doubles is. Recently, so that's the first answer I give you. The second answer I'll give you is something you mentioned at the beginning of this show, was storage facilities. I recently have invested in 2 of those. Love them. Man, I wish I got into those 10 years ago. There's so many great things about storage facilities. So I think that's another great market to be in. Talk about cash flow and annuities and valuations. That's awesome. I wish I got into it sooner. So, but I've done a little bit of everything. I would say that those are the 2 things. If you're looking for bigger gains, flipping gives you nice big pops. When I say big, make 20, 30 grand. Yep. Storage units, facilities, same kind of thing. Good cash flow, but when you sell, great pop. And then lending. That's the last thing I'd say. I like lending. I like to let someone else do all of the work and get 10 to 12%. It's just, sometimes when you do all the work, all you make is 10 to 12%. So that is discouraging. So I might as well just do that and be the lender. So those are probably the things that I would share that have been successful for me. I'll tell you the things that have not been as successful is lending without having collateral, like in a promissory note. Sometimes if it's with the wrong people, you've got no collateral. I would say going all in, using all of my money back in 2007, when I put all of my gains of my life in the first 5 years into real estate and equity deals. And then we all know what happened in 2008. So being smart and being conservative, paying off your debts, things that people don't say to do. I'm all about paying off your personal home. I know it's against most rules. I don't care about those. It's about sleeping good at night. Make decisions that make you sleep good at night, because you'll just be smarter and you'll have more success. And so when I don't have debt, I sleep better at night. So anyways, that's my 2 cents.
Yeah, no, hey, it's very true. And especially on a home, it's like it's something, well, you can leverage these things to 96.5%, or it's sometimes all of it. It's like, it's just called over levered. And then the thing has 0 chance to produce income unless you're moving out, I guess. And
that's right.
Yeah. So I see that the same way. I like that you said storage. Yes, I've been doing storage the last couple of years, just been developing it and building it. And yeah, man, that area's got a lot of juice to it too, because I think it was very underdeveloped, and you can automate the management. It takes a lot of things. As long as you have the right demographics, the right exposure, the right areas, we've had pretty good success with anything.
I love storage. I think it is my favorite thing right now, to be honest, the storage.
Yeah. And you and could you tell me a little more? I think we're talking investing again, and you said that you lend, and of course, you got to have capital to do that, but you lend out to projects, bigger projects, any kind of project, or how does that work for you?
Well, I'm just talking about my retirement account. I personally will lend out. I used to have a fund where we would lend out. We don't do that any longer. I've got friends, lots of business partners, old business partners, who have funds that lend money out on projects today. Me personally, I don't. I'm just doing my own lending on my own deals when I see stuff come up. But no, I've got lots of friends that are lending, in relationships that are lending on different deals, doing your typical, either debt or equity kind of, deals with people.
And you lean towards debt, then you like the debt side.
I like first lien position. I like that. I like the debt.
Yep. Gotcha. Yeah. That's interesting. Well, I got a series of questions then, just I like to ask kind of, well, as we wrap this thing up, what do you feel that if you're there, just the person sitting with a 401k, maybe it's got a couple $100,000 in it. Maybe they're 55. Maybe they have 500 grand, right? I don't know at that point how much typically, but what would you tell them right now? Would they just sit and if that's all they understand? I know you explained that pretty in depth. If that's all they understood, is that just where they should stay, or do you think it is worth them educating themselves and finding a different area to find more yield?
I think it really is up to them. I would say that I think if this conversation interests you, I think it's worth spending a little more time, having a call with someone on my team, doing a little research online, and dabbling in it. You don't have to move your full 500,000. Do $100,000. Do your first deal. Lend or partner or syndicate with somebody, and test it out, and then go from there. Because if you're intrigued by it, test it. If it goes well, then maybe do some more. But if you're unhappy with the results are where you currently are, then you should look into it. If you're happy where you're at, God bless you. Keep doing it.
Yeah. Well, I think, you just keep doing what you've been doing. And the theme I've always had is unfollow the herd a little bit, just more or less that there is other options. That's why we're doing this podcast. I think we're very in tune with all the different options into investing. You should be curious about this, but probably educate yourself. Is it real estate that you're interested? Is it storage specifically? I think the more specific you can learn about a product. Once I got really honed in on storage, it's like, why wasn't I doing this out of the gate? And my wife and I, she ran a property management company for like a year and a half for like Class C and B property. It just tore us down. It was like didn't have enough properties to make the company like profitable, and then just the amount of headaches that came with it. It just really made things a lot harder. And in storage, you can be 80% full and still make money. It's like, I can live with that.
Yep. Totally agree.
What's one of your biggest fears? Fully loaded question.
Well, I know, I mean, there's my biggest, besides the obvious, which is, you always, health with your kids, and, that there's no addiction issues or no health problems. That's an easy one. That is a fear that I do have just in general. But from a business perspective, I still have a fear of losing everything, because I did in 2008. So I make decisions today based upon protecting myself from that. And so I'm not as aggressive as I used to be because of that. So I have a fear of losing everything. So I'm more conservative.
You tell me a little bit, just because I lived on the backside. I'm in North Dakota, so we were in the oil boom, right? And on the backside of that, so we weren't as affected. But what, did you lose everything? I mean, ground.
I was having success for 5 years in real estate. I have two kids and one on the way. Just young. And I thought because I was crushing in real estate, I would go do apartment complexes. So I put all my money with some other partners, and we got some debt on a couple of big deals. And so I was all in. Then the market crashed. And so not only was I at zero, but I was at negative $25 million. Banks, I owed money to banks. My partners filed bankruptcy. I had banks coming to my house where my pregnant wife and two kids were to serve me papers. And it was a really tough time in life. And so because of that experience, I was like, I'm never going to put myself in that position again. So I'm more conservative now because of that. And so I'm glad it happened to me early on in my life, for sure.
What did you instantly go back to? Obviously, you had some good knowledge in real estate, and did you go right back to that then in flipping?
Right back to it. I was depressed for 2 days. I was sick. Didn't really tell my wife at the time what was going on, because I didn't want her to be stressed out about it. She was pregnant. She's at home. It wasn't her job. I'm the provider. And so I went right back at it. And that's when I knew I was good at what I did, because before that, everyone could make money in real estate. You buy it, it go up in value, you'd sell it. Didn't matter if you were good or not. I didn't know that at the time. But then I was making money while the market was still going down. So then I knew that I was pretty good at what I did. So that's what I did. Went back to what I knew. That's all I did. And I hustled. I worked hard. And it worked out. So
yeah, good. That's awesome, man. That's a great story. Where do you see yourself 10 years from now? Where's Greg at?
To be honest, doing what I'm doing, I love it.
Yeah.
I spend half my time in Vegas, half my time in California. I spend a lot of time with my family and friends, and I'm going to work till I die. Not because I have to, because I like to. Teaching people about self-directing, doing 2 or 3 real estate deals a year. Uh, uh, I'm happy, so I
Yeah.
don't see it changing.
Yeah. Well, that's good. Well, you're keep making an impact. I see. Well, I do see something that you're building your brand up quite a bit. I see Greg Herlean almost everywhere now. And when did you commit to that?
This year, my team was like, and me, I was a little frustrated because a lot of Horizon's growth has been based upon other influencers and people's. And so then I'd have to like wine and dine them. And they're like, Greg, why aren't you just talking more and you doing more? And we'll just get our own direct, message out there.
Mm-hmm.
And so they convinced me to do it. So I try not to watch most of my videos because I don't like hearing myself, but I need to do that better. But anyways, yeah. So that's been where we're at.
Has that impacted your bit? We both follow Ryan Pineda, and he's a mentor of mine, and has helped me a lot out in content. And I was a concrete guy. It's not like I wanted to get in front of a camera and talk about my life. So has it helped your business? I mean, have you seen some kind of impact?
Oh yeah, for sure. I mean,
Yeah.
yeah, it's definitely impacted the business. So we'll keep doing it, and I'm getting better at it. So we'll see.
You're just in the mud. That's where I'm at. You just keep going. You just keep producing. You get better. What does unfollow the herd mean to you?
Unfollow the herd.
Unfollow the herd.
What it means to me is uh, taking action on what you want to do and not what others want to do. Taking action though, not just saying it. So unfollowing is a verb, like in my opinion. So it's taking action and doing what you want to be doing. If that's right next to the herd, if that's a little bit off from the herd, or completely opposite direction of where the majority of people are going, like right, Bitcoin was a big craze. I didn't follow that herd. Maybe I made a mistake, but I stayed my course and I did not follow the herd. By staying the course, you'll be more successful, in my opinion. So whatever your course is, don't get distracted. Follow your course.
Dude, that's solid. That's solid. Where can more people hear about you, Greg? Where are you on every platform?
You come to our website, or you can email me, or go Greg Herlean at Horizon Trust. Just my full name, Greg Herlean at Horizon Trust. I respond to all my emails, so email me or DM me and social media. You can get a hold of me through you, Mark, but
Yep.
or go to our website. Anyone that contacts us, we always ask, how do you hear about us? So, but you can go to my website, go to my social media, email me directly, ask me questions, Greg Herlean at horizontrust.com. I'd love to answer all the questions you got.
Greg, I appreciate you for coming on and taking the time today, man. I appreciate you.
Yeah. Thanks for having me. Appreciate it. Thanks, Mark.